Ira Epstein with your morning flash update for this Wednesday, the 6th of April, 2022, 8:30 a.m. Central Time. Before I get any further, I've put out our special report on the S&P 500 index. It's a video report. It covers monthly, weekly, daily charts, price counts, seasonal tendencies, the inversion, and another rule, the SAM rule, that talks about what you have to get in the way of a rise in unemployment to confirm that you're going to have a rough landing from the inversion. Now, speaking of the inversions, you're not quite there again. You slipped back on the 2 over the 10 years, so they're going back and forth. It's about 8 basis points under it right now. To view my report, by the way, just take your cursor right now, bring it up here. An icon will appear. Click on it, fill out that, you'll go right into the report. Can I make it any easier? No emailings. I've done those. So if you're not on my email, unless you're not about to, unless you do something and take one of our free offers somewhere. So let's talk about today, because there's a lot of data coming out, and then we'll come back to the markets. We had the mortgage market headline recap. Negative in every category, down 6.3% for the headline. The purchase itself down 3.5% and down 9.9% on the refi. So the rise in interest rates certainly turning that market off. The Conference Board's U.S. March Online Help Wanted Index comes out at 9. These reports have shown that we have a tremendous amount of jobs still out there. The EIA market oil data happens at 9:30, and at 9 o'clock in about a half hour on Capitol Hill in a subcommittee, the big oil execs, Chevron, Exxon, all the big boys are going to be there, and they're going to be drilled by Congress asking why energy prices are so high. In some areas of California, you're talking $7 a gallon right now. Monmouth, I think, was the area they're talking about on that. We get then in the afternoon something that everybody's going to be all over. And this is due to Leo Brainerd yesterday talking about, and she's a Fed governor, talking about the balance sheet runoff. It's going to begin in May, according to her, and it's going to be quick, and interest rates are going up quick. So at 1 o'clock, what does she know that other people don't? They're going to look at that. And then we're going to find out how the member states, I hope today, of the International Energy Agency, in other words, the European states we're talking, how much oil together they want to release from their storage to cool the markets there. You know, we're talking 1 million barrels a day, and as I've said, it's a great idea. Problem is the infrastructure, I don't believe, is in place to get that done. Now, we're getting a break in the stock market, which I've been expecting. It's part of my report. I've been looking for a pullback right into the end of this week, and that's where I'm looking for the market to start getting its footing. There's important reports. If you take a look at it, you'll see the key date according to seasonalities coming right in front of you. Metals picking up. They were down a lot more earlier. The copper market backing off beautifully from where I thought it would. The 481 level, which was the upper Bollinger Band for those of you that are students of that. The dollar is stable today. Number of currencies settled back a little bit, and you're down in the grains. Now, one of the things I've got to tell you that I noticed and I started looking at hard last night in my research was there's 2 markets, actually 2 complexes, that are really still volatile, and everything else isn't. It's lost Ukraine in volatility in a number of markets, except for the energy markets, because they still move at times $2 to $4 a barrel in a day, and in the grain market, especially wheat, which has a tendency to go up 35 to 45 cents a move or down. Those are the 2. Everything else has gotten back very much into the normal volatility, and that's important when you're looking at your different trading. Now, in my stock report today, what we're going to be looking at is the analysis first on the chart in terms of the weeklies, the monthlies, and the dailies. Commentary. I'm going to discuss for you the inversion, hard, soft landings, and some ideas on that. In addition, as to one of these reports that you look at, how much is unemployment going to rise if that happens, and does that call for a hard or soft landing? Again, it's going to be focused only on the S&P, since that market in the past 25 years has done what? Out of 25 years of the month of April, We've had gains in 20 of them. That doesn't mean we have to have a gain this one. That means, what, 5 years it didn't? Which one of those is that going to be this year? So you're right at the beginning of that. To get the report, follow me. Just take your cursor, move it up here, click, and you'll be able to get right into the report. I'm Ira Epstein. I'll see you at the end of the day with our market wrap-ups. You have a great trading day.